Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we've had here is another bear market rally from 1850 and change up to the 90s. We've done about 143 handles off the bottom. The first one was from the one from 31 did 117 handles. This one did 143 and change. That's assuming that the high is in. There's no guarantee that the high is in, not in this crazy market. So yesterday afternoon, they tried to end the rally. They took it down about 40 handles. They went and did 45, 46. The response to that was to do just a full V right in their face, all the way back up to a higher high, and that climbed up. They tried to take it down, and they moved them right off of that down to the 45 area, and they ripped it. So where do we where do we go from here? Well, we got lower highs all through Globex. It just made a marginal lower low. I expect it to come back up, test like the 71 to 74 area, and then make a decision about whether it wants to make another lower low. And on a break, I mean, it's not out of the realm of reality that we would retest 45. If we break today's low, then the bear market rally, is over. And yes, I keep referring to it as a bear market rally because look, we are significantly below the 200-day exponential moving average, and we are significantly below the middle band on the daily chart. And as long as that continues to be the case, then we're in sell rallies mode, and these pops are basically bear market rallies. They are big, they are violent, they go farther than you think, but they end. And what you want to avoid is being early. You desperately want to avoid being early. So let's see how this plays out this morning. Now, the flip side is if they're not done, if they want to head higher, then you start to look at areas like the weekly pivot, 2013-30. Mentioned very early on in the week to my subscribers. Every week in 2015, we have hit the weekly pivot. And it's not out of the realm of reality. Not after this kind of violent price action that we saw yesterday. Either side can take this a long way from right here. They just have to kind of get the ball rolling downhill a little bit, so to speak. So it should be a very interesting day. For many of you out there, this is still too fast to trade, and I would caution you against trading it at all. And if you do trade it, you should trade it with reduced size, and really be mindful of not getting into something on a Friday afternoon or a Friday morning that is going to screw up your week. So now the flip side of a lot of this is a hard break opens up 45. If you get below 45 and the bears accelerate things, I mean, you could get a really deep down move. So don't do stuff in a really fast market if you're not a fast market trader. There's no shame in that. I have spent the majority of my week trying to contain the appetites of my more experienced traders and trying to keep my less experienced traders safe, mostly by keeping them out of the pool except for a few select situations. And it's worked out well in that we've been able to pick our spots when people can safely do different setups and things like that. But for the most part, I've been a broken record. It's just too fast. Don't trade. I mean, if you think this is supposed to be exciting, you're supposed to, cowboy it around and everything, you won't be a trader for very long. I promise you that. So you have got to be aware of risk. You have to. This volatility mess is not over. Yesterday afternoon, hopefully, proved that to everybody, because whether you were a short or a long, you got a violent move. Okay, Everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I will be back Monday morning with another webcast. Have a great weekend. Trade 'em well, everybody.